if I asked you, Alex, where would the focus be for 2024? Do you think that the market would shift from regional to metro more, or do you think that, there would be enough activity in basically both the markets for people to, catch the short-term growth?
It depends on the price point. So lower price point, we'll definitely see, growth in regional areas, and that's just because that's where those price points actually exist, right? They don't exist in greater city regions. So by lower price point, I consider anything in 300 to maybe 500 range. And for markets that are within that range this quarter, there's potential definitely growth there. But, there's always that overlap at a higher price point where you have LJs, we're capturing LJs in both regional and capital city markets. I think that's pretty much where it will be determined by, the other factors that we look at. So it's hard to answer that question without diving deep into the data.
There is no right or wrong answer. You're right. When it comes to some of these questions, right? Typically it's very dependent on different states where, some states would see a lot more activity in the regional markets versus metro areas. For example, Sydney, Melbourne, you would see that, metro is a lot more pricier, and so affordability indexes are quite low. And so naturally people would be more focused on, investing into some of the regional sides of, some of these bigger markets. Ultimately, it comes down to investor choice as well, whether they're chasing growth and yield. One thing that I'm quite certain of is that, as the news around interest rate drops, comes in, and the consumer confidence starts coming back, and the credibility starts opening up, or credit starts opening up from bank side of things, you would see that people's risk appetite changes more from regional to metro.